For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 populations live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this group of people.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I Am Possible, where we manage to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients if they are family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. To join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Hello, everybody. Welcome to today's webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Trading Without Speculating in the Stock Market. My name is Shin Chu. I'm the moderator for this webinar. Now, before we begin, the disclaimer, whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Allow me to briefly introduce our speaker today. He is a position trader in the capital market focused on stocks and futures. He is the founder and chief master trainer of Street Finance. He has his own signature program, which is Street Trader Intensive Program, which allows individuals to trade without monitoring and speculating in the market. He is featured in Britishpedia Biography Encyclopedia Successful People in Malaysia, 3rd edition. He is also featured in media such as City Plus FM, Borneo Post, Sinchu, etc. He often speaks for Bursa Malaysia and also other investment banks, and he's also a frequent speaker in universities and colleges. He's none other than Mr. Bong Jin Hao. So Jin Hao, how are you today?
Hey, I'm great. Can you hear me?
Yes, I can hear you
All right.
loud and clear.
Okay, cool, great.
Fantastic. So I will stop sharing my screen and hand over the control to you.
All right, thank you. Let me just share my screen. Okay, so can you see my slides?
Yes.
Full screen?
Yes, perfect.
Okay, great. All right, so disclaimer, no need to go through it here. All right, so hi everyone. Welcome to this webinar brought to you by Bursa, managed by LifeSham. And yeah, so first of all, I'd like to thank everyone for being here today, okay, so that I can share with you this very topic, all right, so which is trading without speculation in the stock market. All right, so again, my name is Jin Hao, okay, so Shane has already introduced me just now. Okay, let's just quickly, okay, jump into the content outline for tonight, okay, because I respect your time and I don't want to drag any further. Okay, so make sure, okay, you are ready. Okay, if you're ready, can you type ready in the chat box? Okay, type ready in the chat box just to make sure that you guys are still, you're still with me. Okay. All right. Okay. Okay, great. Okay, so first thing, I want to talk about trading versus speculating, because I think a lot of people, when they get into trading, okay, I think there's something that we, including myself, okay, often misunderstood, okay. And the second is understanding trends, and the third one, we're going to dive into some strategies, okay, and they are reversal versus trend continuation, and these can be used across a lot of different, okay, asset class, like you want to trade Bursa stocks, you want to trade whatever derivatives, or even, you know, other things, okay, as long as it has price and you have chart. Okay, and last but not least, I'm going to share with you how can you create a trading plan as part of your risk management procedures. All right, so let's move on. Okay, so when it comes to stock trading, okay, what's the first thing that come into your mind? Okay, what's the first, what's the thing, or what can you visualize an image? Okay, how does stock trading looks like? Yeah, is it like this? Okay, it's like this, whereby a person needs to have like one screen, two screen. There goes the saying, okay, the more screens you have, the more profitable you are. Okay, so does this come into your mind? Okay, you're gonna be gluing your eyes, okay, in front of your computer, right? Or what you think is like a trading floor, okay, whereby, okay, a lot of people are looking at the price quotes, okay. These are back then, okay, back then. Or what came into your mind is like, okay, people in the on the price floors, okay, and you just like, hey, somebody behind is always, okay, speculating, or there are always somebody, okay, Mr. Somebody, okay, that are controlling the price, so that we as retailers, we always lose money. So when it comes to stock trading, really, these kind of things came into a lot of people's mind, including myself back then. Okay, if I were to talk about, you know, stock trading to my relatives, my aunt, my uncle, who got no idea about stocks, and these are the things that came into their mind. Okay, it's like, wow, stock trading, walao eh. Then you have to keep looking at the PC, all right, then lose money how? Okay, like, you know, last time that person, you know, 1997 borrow a lot of money, and then trade stocks, and the end of the day lose a lot of money until today still all bank. Those are the things that a lot of people come across, okay, or a lot of people will being told that, okay, about stock trading. But that's not the case. Okay, and this is how I trade stocks. Just to share with you. Now, this was an old photos back then because, by the way, guys, I'm from Sarawak, and this was a photo whereby I traveled with one of my friends to be an assistant, okay, of her training campaign, and then after the training, the next day, basically, we went to this shop in Penang, whereby it's famous for the breakfast, and then you have to wait for a long time. And then I was like just sitting there and start trading. And then she was like a little bit surprised. What are you doing? I keep pressing, you press the phone there, here and there for like 5 minutes, 10 minutes. I said, the food hasn't come. I look at the market, bought some shares. Okay. Then she was like very shocked. You can really trade stocks like with just a phone, like literally just a smartphone nowadays. I said, why not? Okay. So to my surprise, that a lot of people got no idea that how you can trade stocks like without, okay, always having a PC with you. Yeah, even when you're having vacation. So I just back from Thailand, and while I was in Thailand, I enjoyed my time. I went to the safari, I visit the malls and whatever thing. Okay. And then basically just enjoy time. Okay. And a lot of time I don't monitor trades. Okay. I just put stops and whatever thing. Okay. I just put you know, pending orders and put limit orders and stop loss and things like that. I just let everything work out its way. Okay. So to me, okay, the reason why I put my money in the market is I want my money to work harder for me, because we have all been working very hard for money, and I don't want trading to become like just another job whereby I have to commit my time in front of PC, and literally becomes like a second job. Okay, unless that's the thing that you are looking for and you are looking forward. Okay, I'm not saying that like day trading or scalping is prohibited, but is that something that you're looking for? If not, then you should be looking into, okay, another way of trading which does not require, you know, monitoring or speculating the market. So now, don't get me wrong, okay? Speculation is one types of trading, okay? Speculation is one type of trading, but trading doesn't equals to speculating. I think this is the first thing that we need to make it clear. Speculation is one type of trading. The speculation is like you are basically guessing, okay, or estimate, okay, that where the price will go, and that's why people tap into certain trades and things like that. It's one type of trading, but trading doesn't always mean speculating. All right. So let me just get the definition right. So trading versus speculating. Now, at the most generic level, okay, trading refers to buying with the intention of selling, regardless of the time frame. So if, let's say, you buy into a company stock because the company, with any fundamental reason, because the company is expanding, because the company might get projects, okay, in the next couple of years, because the company might still, you know, grow, whatever fundamental reasons. Okay, and your plan is actually to buy and then to sell the stock when it goes up in price, maybe next month, next quarter, or next year, or the next 2 to 3 years. You are still technically trading the stock. Now, this is not what I say. This is what is being said by Michael Koval, which is the book behind me called Trend Following. He's the author of it. Okay, so this is what he said. If you are buying with the expectation to sell in the future, you're still trading. But a lot of people do not want to admit this, is because we are being told that if you hold long term enough, then you are investing. That's not always the case. Okay, so if you were to ask Warren Buffett, okay, what's investing? He'll say buy and hold. Okay, it's not buy and sell. All right, so that's the thing. Okay, so trading, it can be short term, long term, mid term, or based on trend, based on seasons and things like that. Okay, now speculation is often very short term. Okay, either intraday or holding a time less than 1 week. Okay, in Malaysia, there's one thing very popular. It's called contra. Okay, T+2 and things like that. Okay, and it involves certain level of market timing and prediction. Okay, this is what speculation mean. Okay, so the thing is, I think that the culture of trading in Malaysia, a lot of time it leans towards speculation. And I don't know about you. How many of you think that, okay, there are more contra players out there lose money than make money? If you agree with me, can you, or you experience it, if you agree with this, can you please type 6 in the chat box? Type 6 in the chat box. Out of those contra players out there, there are more people who are losing money than those who are making money. Okay, I think that's the culture of Malaysia. Malaysians who trade Malaysia stocks. And I'm not saying that this is bad or good, but statistically, many people are not profitable doing so. So the question is, then how can we trade without speculating? Okay, because I realize that a lot of time, like my friends, okay, they are right about the stocks. Okay, the stock will go up in price, but it's not like within 2 days. It may be next week. It might be next month. Okay. But let's say if you buy the stock next month go up 10%. Okay. Do you think it's okay? To me, it's okay. So why contra? Sometimes I was like asking, why contra? Okay. So the way I approach stock trading is through one strategy called trend following. So in order to know trend following, we have to first understand trends. Okay, we have to first understand trends. And I'm going to throw you 2 questions. Okay, I'm going to throw you 2 questions and you're going to answer. Let me know in the chat box. Okay, do you encounter such a situation? First, you look at a stock. The stock price has been dropping and it looks cheap. Wow, drop off from 2 ringgit, drop to 180, then drop to 170, then drop to 150. Wow, cheap. Okay, you buy the stock. However, the stock just become cheaper and cheaper. Now, if you encounter this or you can resonate with this, can you please type C in the chat box? C stands for cheap. Okay, be honest. How many of you encountered this before? Type C in the chat box, or you witnessed this before. It's like somebody telling you that this counter is cheap. Then you get into the counter, you realize that, how come after 1 week still drop? Okay, then a lot of people unintentionally become an investor. Okay, their trading plan is buy at 150 and sell at 160. Then at the end of the day, hold until 50 cents. Okay, never mind lah, the company got make money, I invest lah. Okay, so now there's another situation. You look at the stock price has been going up and you feel like it's very expensive. You're already late for the party, you're late in the game. Okay, you end up not buying it. Okay, however, the stock prices moves higher and higher and higher. You always think that like last week or last month, okay, regret not buying like last week, last month. If this is what you have encountered, can you please type I? Okay, type I. Okay, it's like okay, why not I buy last week? If I know earlier, I buy last week already. If I know earlier, I buy last month. Okay, that's the feeling that we have. Now, there are reasons behind this occurrence, this kind of situation. Okay, now here comes the 3 types of trends that we need to know. Okay, 3 types of trend that we need to know. Right, first is what we call uptrend. Okay, I think it's very easy to know. Uptrend, okay, a lot of people might say, okay, this is a higher high, okay, and then you have higher lows. Okay, you are correct. You are correct. Okay, but the simpler way, okay, it put things in a practical manner. Now, sometimes trend may not be like this. It may be like this, okay, up again, up again, up again, up again, sideways, up again. Okay, correct or not? Practically, it looks like what I drew. Okay, sometimes. But to me, if a stock always create new high, like every month, sure create new high one. So this is also an uptrend. Okay, this is also an uptrend. All right. So the next one is, okay, let me just erase. Okay, the next one is downtrend. Okay, whereby these kind of stocks always break new low. Okay, it's like this month it breaks another low, next month it breaks another low, or next week, okay, this week it breaks another low again. Okay, things like that. Okay, and sideware is basically stocks that are indecisive, okay, directionless. Okay, so follow the trend, follow the smart money. Now, the core belief of trend following is that the trend is more likely to continue than to reverse. Okay, meaning that an uptrend has a higher probability to go up and a downtrend has a higher probability to go down. Okay, this is the thing that trend followers adhere to. Okay, we follow trend. It's like people tell me, okay, glove is very cheap. They throw me or whatever analysis they do. Okay, after 2-3 years, they're still there. Okay, so yeah, it got a bit, then drop, got a bit, then drop. Okay, so this is stocks that are in a downtrend. Okay, so we don't want to touch it. If you are from a trading perspective, okay, better not touch it. Okay, so traders or trend followers, okay, trend traders or trend followers will look into going long in an uptrend, okay, or going short in a downtrend. Now, of course, I don't encourage IDSS in stocks because it's like intraday, okay, but if you trade like crude palm oil, okay, that's shorting is an option, all right, but for stocks, we focus on buying uptrend stocks, okay, so there is not too high for a bull or too low for a bear. So whatever seems high often go higher, and whatever seems low often go lower. Now, can anyone type in a chat box, what are the stocks that you regret not buying last month or last 2-3 months or beginning of this year? Is there any counters that you regret? Can you share in the chat box? Okay, can you share in the chat box? Okay. I see some of the great answers there. Okay. And I exactly have this. Okay. YTL. Okay. So it always go higher, you know. February, March, April. Okay. Maybe. Okay. Nothing. Okay. Go up a bit. Got a bit. Then the price action came in somewhere around April, end of April. It's like, okay, maybe it's nothing to okay, just temporarily. But mid of May, it shot up again. Now, this is where you need to be very careful. Okay. Not say very careful. You need to be very alert about the stocks. Okay. And of course, careful as well. Once you see the stock keep going up and up and up, can you find an opportunity? Now, to be honest, I didn't get in here. I didn't get in here. I didn't get in here. But I get in somewhere around here. Okay. I get in somewhere around here when it break another high. So you see, uptrend stocks every month create new high. Every month create new high. Today drop a bit, but you can see this slide I prepared like last week or the week before last, 10 days ago. You can see that the price August 20. What's the price of YTL today? Okay, it drops. I know today it drops, but what's the price now? Okay, so we talk about possibility. To me, stock trading is not okay. It's not. I buy a 10-cent shares and 10-cent shares go up to 20 cents. Then I make 100%. Okay, this is not the entire picture because you got to understand risk-reward ratios as well. Okay, so again, we look at consistent uptrend. Okay, I hold these stocks. I can hold like as long as the trend is still up, I'll keep holding. Okay, how about stocks like CGB, YTL Power as well? Okay, CGB. Okay, still uptrend. So you see, it goes like sideways, up a bit, sideways, up a bit, sideways. Then price action came in. Okay, then it just keep trending up and up and up. They have retraced and then reject. The price wants to go down, but it go up. Okay, then you can already see that it refused to go down. It refused to go down. If you know what I'm talking about, this is what I call like a pin bar. Okay, or a hammer. Some people call it hammer pattern. Okay, so it's a rejection pattern. Okay, so again, this is a stock going up and up and up and up, then continues going up. Okay, now how about a downtrend? How about downtrend? Downtrend looks like this. You see, December break new low. Okay, January break new low. Try to go up again, but February break new low again. Okay, March, okay, sideway, then April, sideway, May break new low. Okay, so this is what we call downtrending shares. And downtrending shares, we always have one pattern. Okay, is the spike here. Okay, spike like this, boom, go up. This one, boom, go up. Okay, now if the stock is in an uptrend, I'm not afraid of the spike. Okay, but if it's in a downtrend, I will be concerned about the price going up. Now I call this a fish hook. And now in a downtrend, there is always this thing. It will come down, okay, then boom, go up. And some people will think that this is a potential reversal, but after that it goes down again. Okay, so people buy here, basically they are stuck. Okay, it's like fish hook. Okay, and then it boom, go up again. It looks like a hook. Okay, it looks like a hook. All right, so downtrends, we always have fish hook. All right, so it always hook inexperienced trader into the stocks or counters. Yes, it is like dead cat bounce. Okay, now dead cat bounce, very hard for me to explain. Okay, but fish hook, everybody knows because it hook people in. Okay, this is like dead cat bounce. Okay, so now the next, okay, you can probably look at this kind of stocks also. Okay, again, this is downtrend. Okay, the next. Okay, this may look a little bit complicated because it crash. Okay, and then it goes up, then down again, then goes up. People think, might be recovering, then goes down again. Okay, so this is another example of a downtrend. All right, so uptrend and downtrend. Okay, I hope everyone understands. So again, what's the trend that we must focus on? Can you type in the chat box? Okay, what's the trend that we must focus on? Okay, up or down? Okay, so definitely uptrend is the one that we have to focus on. Okay, like some of the stock that you guys mentioned, like YTL Power is also, okay, is also very is very great as well. Okay, stocks like Pakistan maybe is more like a speculative play. Okay, but it is also going up at least, you know, for the past few months, and recently we have a push. Okay, and then right now it seems like it is losing its momentum already. It's like potentially, you know, end of the story. But it's very hard to say because if you do a top-down analysis, the uptrend is still there, just that it becomes trickier. It becomes trickier. All right, so let's look at the next topic, which I think you guys might be more interested in, which is a little bit of strategy. Okay, reversal versus trend continuation, because there are basically two types of trades that you can take. The first one is reversal. The second is continuation. But I'll start with continuation first. So continuation is basically those type of stocks whereby it keeps going up, going up, going up, going up, and then you don't know how to get in. Okay, you don't know how to get in. So, okay, these type of stocks, okay, what you can do is basically you find a correction. Okay, you find a correction like this. Okay. Okay, you find a correction whereby it kind of like, okay, I like, this is what I like to find. Let me draw. Let me annotate. Okay, I like to find stocks, okay, that, you know, that it goes up, goes up, goes up to a point it comes down like this. Okay, whereby you have lower low. but it is still holding above like major support. Okay, then I will draw a line like this. Okay, when it break, okay, I would enter a little bit. And then when it comes down, hit any support and go up, I will buy another like half position. Okay, do you get what I'm trying to say? Okay, so this was prepared, also earlier on. And then this stock right now is around 140 plus, I believe. Okay, how many of you are watching this stock? Can you type E? Okay, can you type E? Okay, if you are watching this stock, type E. Okay, so it's very obvious that you need to watch stocks that are in an uptrend. You need to have a watch list that are in an uptrend. Okay, that are in an uptrend. So, if the stock is not in an uptrend, then most of the time I wouldn't be interested. Okay, I wouldn't be interested. Okay, so this is an example on how you can find ways to buy. Now, for example, this kind of stocks, okay, if you don't get it here, it's fine. A lot of people think that, oh, I must buy here. If I don't buy here, it already go up, then it's an end of story. Oh, cannot already. Okay, so then it keeps going up. You find opportunity, like go up. There's another price action, okay, and go up. It's a price action, okay, breakout, up again, okay. But here is what I would say only very experienced people will enter, like based on this, okay, chart pattern, okay. But usually I like to buy stocks when it bounce off any kind of support, okay. Well, somebody said I had Ewin sold at 0.75. Hey, do you guys want to know how to hold this type of stocks? Okay, how to hold this type of stocks, at least hold longer. If you want, can you please type hold, HOLD? Okay, HOLD. Later, okay, after I finish the slide, I share with you how to hold. Okay, or at least you take half profit lah. The rest you try to hold, because sometimes, right, you realize that some of the stocks you buy, you make money. Okay, I don't know, you sell at 75 cents. What price you buy? Can you share with us what price you buy? Then, because last time before I start learning from my mentor, okay, I always realize that stocks that make me money always go a lot higher. Okay, it's like last time I asked my mentor why I buy the stock. I bought at 2, then I sell at 3. I thought 50% is a lot already. How come? It's like this kind of stocks always I go to like 4 or 5 or 6. Okay. So then my mentor told me, okay, if a stock want to go up, don't set a limit how far it can go. Okay, don't set a limit how far it can go. It's like, to be honest, let me just ask you, before COVID, do you ever thought that, or during COVID, like April, May of 2020, do you ever thought that Top Glove can go to 30 ringgit? I believe most of us don't expect that, right? But it just keep going up. Why? Because again, don't set a limit on how far a stock can go. I think that's the most important lessons that I learned in my journey. Okay, don't set a bar on how high a stock can go. Okay, we purely based on technical. Again, this is AirAsia X, a stock that I tend not to like. Okay, airline counters. But again, trend is trend. Okay, trend is trend. Okay, so again, you can see that the price action actually came in here, then comes down, boom, go up. Okay, and then it comes down. Maybe you take profit here already because the drop is a little bit too much. Okay, and after that, you draw a counter trend line. You realize that it break out again. Then it just go climb another wave. Okay, another wave. Okay, what happened if investment bank put TP, take profit? I think sometimes a lot of people overthink. Okay, if bankers sell at 250, the stock come down to 240, I sell at 240 lah. Okay, I sell at 240 lah. Okay, don't always think that we can take profit at the top part, but I think that one thing we should we should not set the limit or set the bar is how high a stock can go. Okay, how high a stock can go. Some people like to overcomplicated things. Okay, like last time I also think that because my uncle told me, yeah, stock cannot one lah. Okay, you know, those market makers, you buy at 2, okay, then they push the price down so that they can buy cheaper. A lot of all these things. I don't know whether these things are true. Okay, but what I know is if we go through proper learning, okay, and look at the charts, respect price levels, I think a lot of things are going to be better. Okay, so how do you trade an uptrend continuation now? Get your pen and paper and whatever writing tool, your iPad things, write this down. Okay, so first, you got to ensure your moving averages. So what are moving averages? Okay, moving averages are basically average of prices. Okay, are showing in uptrend. Now, for example, I like to use 3 moving average. Okay, now why do I use 3? Now, I don't care you use, like some people use 30, or maybe like 60, or maybe like 150, or maybe like 250, or whatever thing. Now, more lines don't make you better. Let me just share with you the idea of using 3 lines is 1 represents short term, 1 represents mid term, 1 represents long term. Now, I think EMA 200 or MA 200 represents long term is what a lot of people can comprehend. Now, what does EMA 50 means midterm? It means 2 months average. Okay. 20, 1 month average. Okay. So when a stock is trading below, okay, trading below EMA 20, it means that people who bought 1 month ago, they start losing money. Does that make sense to you? Okay. Yes or no? Does that make sense to you? All right. So when people are losing money, people get margin calls, people get disappointed, people will get whatever kind of emotion. Okay. But when people start losing money, it will sometimes motivate people to sell. Okay. So does that make sense to you? Yes or no? Okay. If a stock drop below MA 20 or EMA 20, okay, does that mean that, okay, does that mean that people who buy on average bought 1 month ago, they will start losing money already? Okay, they'll start losing money already. EMA 200 is just a very popular, okay, indicate EMAs that people will use. If you don't use 200, then what you use? Okay, 150, 250, or 365, it doesn't matter. Okay, whatever works for you, then you use that. Just remember, the key of using 3 EMAs or multiple EMAs is that 1 EMA represents 1 time frame, right? Short term, mid term, long term. There's no point using like 150, then use 200, and use 220 to use 250 again. Okay, so long term, you put 1 EMA, like 200. You want to use MA, up to you. Okay, so don't complicate things. Like some people always ask me questions that I don't know how to answer. Jinha, why you use EMA 20, you don't use EMA 18? 18 faster than 20. What you're talking about? Okay, don't have to overcomplicate things. Okay, so remember the key of using multiple EMAs or MAs is short, mid, long term. Okay, so if today you are using EMA or MA 20, MA 40, or MA 200, if it works for you, it works. But most important thing is to trade an uptrend continuation, you have to make sure that all these EMAs or MAs, they are still showing you an uptrend. If a stock is in an uptrend, the 20 is above 50, 50 is above 200 EMAs. If you are using like 20, 40, 150 MA, it will show the same message. Okay? Doesn't matter which line. Okay, just want to make it clear. Okay? Now, next thing, when the price pullbacks to support, okay, when the price pullbacks to support, you want to wait from a rebound from the support. Okay, you want to rebound from a support. For example, if this is your EMA 20, you're going to wait the stock rebound from this EMA 20. Okay, then you buy. Okay, or, okay, If the correction has lower highs, like what I said just now, you draw a counter trend line. Okay, and wait for the counter trend line to break out. Usually, if it's a counter trend line, then I will mix it with the first one as well. Counter trend line break, I buy a bit. If it can retest the support, go up, then I buy another like half positions. Okay, then I put my stop loss below the previous swing low or support. Okay, I put a stop loss below the previous swing low or support. Okay, so this is generally how I trade a trend continuation. Okay, trade a trend continuation. So this is an example. Okay, Penta. So, sorry, this is a reversal. Sorry, this is a new example. It's reversal. Sorry, wait. I think I messed up. Is it? Okay, let me just put this first. Okay, how to trade reversal? This is the next one. Okay, so after a downtrend, okay, previous slide. I think I forget to put this example inside. Wait, let me just double check. Let me double check. Okay, so you guys want this slide, right? Oh, okay. I understand. I terbalik it. Okay, so basically, trend continuation basically is like this. Okay, like this. Like this, like this. All right. So we can see that it rebounds from EMA 20 and it breaks counter trend line at the same time. Okay. So this one, same thing. It fake out a little bit, go up, break the counter trend line, come back. You have multiple opportunity. Okay. Here, fake out, but you see this one, why this break of counter trend line can buy? Why? Because your 20 is still above 50. Your 50 is still above 200. So that's why it's still an uptrend. Everything's still in sequence. Okay, everything's still in sequence. Okay, so I don't think can give the slide, okay, but if you want, I'm not sure if there's a replay, but if you want to take quick screenshot, okay, you can take. Okay, so all right, so next we talk about reversal. We're going to talk about reversal. Okay, if you guys want to take screenshot, right? Okay, you can click your Windows button, okay, and then you press print screen. It will directly go to your directly go to your picture album in your computer. Okay, so next let's talk about reversal. So reversal, okay, it looks something like this. When the price is approaching the EMA 200, which is the green line in my chart, I will take a look at the stock. Okay, I will usually wait it break first. Okay, when it's approaching, okay, I will take a look. If you want to take trades here, probably this one will hit your stop loss. Okay, this area will hit your stop loss. But if you don't mind the risk, of course you can take. Now the safest one is when your 20 is above 50, 50 is above 200, or there's a crossover. Okay, so the first attempt here basically fell. Okay, the first attempt here basically is because you see the price try to break above EMA 200, comes back down to 20, go up, but it fell. So this might be first attempt fell. But the second attempt, which is here, when the price go above EMA 200, okay, close above EMA 200, come back down to EMA 20 or 50, and the rule is the 20 must be above 50 also. Only left the 200, okay, yet to go up, okay, and then you enter based on a breakout or rebound. Okay, now that's the second attempt. All right, so when it break the structure, okay, it breaks the structure, then I'll enter. Okay, so this is also a weekly. Now this is a second attempt, okay, whereby you have a strong EMA 200 weekly support as well, which is exactly this place. Okay, this place. All right, so again, break of structure, then you enter. Now, why I don't like buying stocks here is because things can still fall down. Okay, if you look at the the daily, it can still go down before this chart. You can go and study. So it is very risky. Usually I'll wait until things approach EMA 200. Okay, approach EMA 200 and when things break a structure, okay, then things will go up, will probably go up. What time frame? Daily. This one is daily, this one is weekly. Okay, you can use weekly as your reference as well. Okay, so again, because I don't monitor, I don't speculate, I don't use anything tighter than daily. All right. So to trade reversal. Okay, first criteria, after a downtrend, you got to wait the stock to move back up. Okay, approach EMA 200. Okay, next, it will be better if EMA 20 is above EMA 50, meaning that now when EMA 20 is above 50, it means that short to mid-term, that stock is already in an uptrend. It just has not become a long-term uptrend. Okay, it just has not become a long-term uptrend. Okay, so you wait for a structural breakout above any key level. Key level refers now. Sometimes you will see stocks, okay, it behaves like this. Behaves like this. Okay, it goes up, like a downtrend, then goes up, then it will become something like this. Okay, key level. If you break, retest, up, you buy. Okay, this is what I call key level. Okay, when a price approach any resistance, okay, there will be a lot of key levels that you need to break. So either you enter a breakout or you enter break and retest. So what is a break and retest? A break and retest means a resistance becomes support. Okay, what do I mean by resistance becomes support? Okay, okay, like this. Let's say this is a key level. You break, you'll have a resistance here. Okay, resistance here, turn into a support. If you rebound, you enter here, you set a stop loss down here. Okay, set a stop loss down here. Criteria, it must be above 200. Okay, all right, EMA 200. All right, okay. Okay, this one you might want to take down. All right. All right, so here are some things that you can take note. The first thing, okay, continuation, okay, is usually better than reversal. Okay, as the momentum is already there, it's already strong. You just follow the trend. Now, reversal trades are great only if the entire market has suffered a correction and stocks are coming back up. Okay. Now, if the entire market, you have great candidates whereby the stocks are breaking new high, the stocks are uptrend, I find no point to find downtrend stocks to wait for reversal. Okay. To me, whatever stocks that are strong, I will follow. Okay. Like for last year, okay, earlier this year as well, you get stocks like Chin Hin. If the stock is keep going uptrend, okay, like YTR, stock is keep going uptrend, my primary focus would be buying and getting into those stocks instead of waiting. When glove will go up? When this the next will go up again? Okay, to me, it's a waste of time. Okay, so reversal trades. Okay, reversal trade is only great if the entire market suffered a correction. Then the stocks together, they're coming back up. Then you find stocks that are strong. Okay, then you enter. And also, another thing, the stocks have a healthy rally history, meaning that not pump and dump. Okay, not pump and dump. And they have great uptrend and great downtrend. So what do we mean by great uptrend, great downtrend? It means that when it goes up for 6 months, 1 year. When it goes down like in a year or 2 years. Okay, it slowly go down, go down, go down. If a stock, okay, is a pump and dump, regardless whether or not it's coming back up or crawling back up, I'm not interested in, because pump and dump candidates will always have another pump and dump. Okay. All right. So next is the setup need to have confluence in between daily chart and weekly chart. So just now what I told you is daily chart. Okay, meaning that it's approaching your EMA 200, your long-term kind of thing. Then you have a break of structure. Now you have to check the weekly chart, where the price comes from. Is it coming from any like EMA support? If yes, then this confluence is good. Okay, like what I showed you just now. Okay, Penta. All right. So next, do not catch a falling knife. Okay. If a stock is, falling down, okay, don't buy. Entering a reversal doesn't mean buying at the bottom. Okay. If a stock drop until like 80 cents, I'm not going to buy at 80 cents. I probably wait until the stock go up, re-establish the trend, then only I get in. Okay. So do not feel bad if you miss any reversal setup. Okay. And you think that it's too late to buy. Now, reversal setup can fail as well. This is something that you're going to understand. Okay. Yes, reversal is still a setup, but there's no guarantee that whether or not this reversal setup can go up for another 2 months, 3 months, or 6 months, or 1 year. Okay. But if a reversal setup is successful, okay, meaning that the trend is like properly established, then there is always aftermath, meaning that you can take the continuation buy. All right. So don't feel bad if you cannot buy a stock at low price. All right. Don't feel bad when you cannot buy a stock at low price. So if you learn something, can you please type yes in the chat box? Okay. Type yes in the chat box. Okay. Now, personally, I don't look at fundamentals. Okay. Because to me, price action is everything. Okay. I'm not investing in it. So price action is everything. Sometimes when the price action comes, okay, a company that is losing money, the stock price still can go up. Okay. That's the thing. All right. Okay. So the next part that I want to share with you is how can you create a trading plan as a risk management measures? Okay. How can you create a trading plan? Okay. No plan, don't buy. Okay. So here I would suggest you a 4-step process, and this is called a TEST process. Okay. It's trend, entry, stop loss, taking profit, or trailing stop. So trailing stop is the one, okay? Trailing stop is the one that I would use if a stock is going up and I'm in position, okay, and I don't want to take all profit. I want to trail it up, okay? Like Ewin, or Ewin, I don't know how to pronounce the name, okay? But like those kind of stocks, okay? So this is the 4-step. Okay, this is a 4-step. So basically, first you're going to identify and see, okay, and know that the stock is in trend. Okay, in trend means, okay, check, stocks, uptrend, something like that. Okay, and then, for example, let me just give you an example. This is a losing example. Okay, I'm not going to show you, okay, everything glory. All right. So for example, this stock, okay, is going up and up and up and up and up. Let's say here you didn't buy. Okay, it comes down like this, then go up. Okay, it comes down like this and go up. So how can you buy? Plot an entry. Okay. So first thing, is this a good uptrend? Okay, maybe here you can argue that 20 is still above 50. Okay, and then 200 is here. So arguably this is still an uptrend, but it's like you don't know whether or not this uptrend will die very soon. Okay, and here you have a counter trend line that is being broken out. Broken out, then retest. Okay, retest what? Retest this. Okay, retest this resistance as a support, and you also have confluence with your EMA 20 and EMA 60. So When it rebound from here, you aim to buy. Okay, you aim to buy if it rebound like this, huh? Okay, rebound like this. Your stop loss will be below here. Okay, stop loss will be below here. Now, the problem with this stock is depending on how well you take it, okay, how well you take it, this may turn out to be a stop loss. Okay, you can see that. Drop, it didn't rebound. It just go down. So either you don't take this, okay, you don't take this, or you take and basically it becomes a stop loss. Okay, it becomes a stop loss. Okay, you can see that. Because here, let me draw. Okay. Break, come back down to this level. Okay, come back down to this level. And then basically it didn't rebound well. Okay, so usually I wouldn't take this. Okay, basically I'm not in this stock, but if you take, then it becomes a losing trade. But that's basically the first three steps. First, okay, first three steps. First, you make sure the trend is good. Second, you plot an entry. Third, you plot a stop loss. Okay. Fourth, then you decide how much profit you want to take. Okay. Now I'll share with you a few more examples. Okay. So this is WCEHB. Okay. WCEHB. Okay. So again, this is where it comes to a support. You can see that it comes to a support. Wait. Okay. Now, first thing, TEST, trend. Is this an uptrend? Yes, check. Entry, what's the criteria? Okay. If it rebound from here, I'll enter here. Okay. This is entry. Check. Stop loss will be below this swing low. Below here. All right. So this is your entry. This is your stop loss. All right. Stop loss. So does that trigger? Okay. Depending on how well you want it to rebound. Okay. How well you want it to rebound. Me personally, okay, I usually opt for 50% rebound. Okay. 50% rebound. Let me show you. Okay. 50% rebound means I want this. Okay. So let's say this is a corrective wave. I want it to rebound above 50%, or at least you see these candles. This is a correction, right? This is a correction. I want this bearish candle to touch. Okay, to touch. I share with you guys one tips, can I? If yes, type 2. Type number 2. Yeah. When you see a rebound, right? When you see a rebound, okay. Usually, you see, let me put, let's say a YTL power. Yeah. Okay. This is a correction, right? This is a correction, right? Correction. Are you still with me? If yes, type yes. This is a correction. Mean go up, correction. Okay. Then when you want to plot a rebound, okay, you find within the correction, right? Which bearish candle is the longest one? Which bearish candle is the longest? Okay, so let's say the longest bearish candle in this case, okay, the longest bearish candle in this case, okay, so from here to here, I use trend line, okay, to draw. The entire wave, this one is longer, right? Longest, right? You buy when you break it or touch it, okay, you buy, and you set your stop loss below the swing low. This one is the swing low, below the swing low. So your stop loss is like what, 11%? Then your take profit, right? You take two times. Then you tell me hit or not. Okay. If you think this is helpful, type yes. Type Y. Type Y. Okay. If you want to know how can you buy a good rebound, first is, of course, you can use the 50% rule. Second, you can use is by using the longest bearish candle as a guideline. Okay. So this is how you can get into, okay, stocks like this. Okay. So this one, same thing. You see it goes up, come down, break longest bearish candle, basically fly. Okay. But if it is only one bearish candle, don't tell me tomorrow it goes up, you buy. Okay. Don't chase things like this. Okay, so this is just one of the ways that you can use. All right. So to how to plot the trading plan. All right. So how many of you are learning so far? This, you understand how the TEST works. Okay. Can you please type 4-step? Okay. Type 4-step. Okay, 4-step. Okay. Actually, YTL it's like this. Okay. Same thing. Assuming you are still here. Okay, assuming you are still here. So you see this thing. You see this thing. Still uptrend. Right at support. Okay. Right at support, and then it rebound. And then I ask you, which one is your longest bearish candle? Okay. Which one is your longest bearish candle within this correction? Obviously, it's this. Okay. So when it breaks this, okay, when it breaks this, okay, when it breaks this, you buy. Okay. Stop loss is normally set below. Your stop loss has to be below buying price. Okay. Your stop loss should be below swing low. Okay. This is a swing low. You have to be below it. Okay. Like below this swing low. Okay. And then here your risk is 11%. Your take profit 2 times. At least 2 times. Okay. At least 2 times. All right. So correction has to have 3 bearish candle. At least 2. Okay, at least 2. But ideally, to me, I want it to touch support. I want to touch support. I don't want to be like this. Risky. Okay. Can you say this like go up, longest bearish candle, only this one, then break, you buy? Can riskier because now moving average is like a rubber band. It will pull the price back to it. Okay, the price will try to go away, then you pull it back to it. To me, when the price is nearer to the EMA, it means that in an uptrend, it is cheaper to buy. So here is cheaper to buy compared to here. Compared to here. Okay, so now it's expensive to buy. Okay, I want to wait it to pull back down. Okay, now remember that TEST, the last T, the first is take profit. Second one is what? Can somebody type? Can somebody does somebody remember what is that? Trailing stop. Very good. Okay. So I want to demonstrate to you trailing stop because this is the one that is very important. Now let's see YTL. Since I'm in this stock, I'm share with you how can you trade these kind of stocks and just move your trailing stop. Now, in a nutshell, okay, I draw the pattern. If the stock go up, like, okay, rebound, you buy. Entry. Then this is your stop loss. Okay, so far, if you remember up to this point, type yes. If you remember up to this point, type yes. Okay, now, next, the stock go up, break this previous high. This is what I call a new wave is created. Okay, a new wave is created. So it goes up, 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 up. My stop loss usually still here. Okay, and then it comes down. As long as it didn't, okay, I will usually move my break even. If it is 2 times of what I risk, I'll take half profit. Now, let's say if this is a resistance and this is support, it becomes a support and then it goes up, I will move my stop loss from here to here. Then it becomes a trailing stop. If it goes up, I move. 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 Okay, so this is how basically you handle it. Okay, so for example, okay, you buy YTL here. You buy here. So initial stop loss is somewhere below here. Okay, it's somewhere below here. All right, so it's somewhere below here. So when it goes up, break new high, okay, come down and go and rebound, break another high. I move my stop loss to below this swing low. Do you get what I'm trying to say? If you understand, type U. U stands for understand. U stands for understand. Okay. Then it goes up, comes down a bit, break new high. This is the swing low. I move here. Okay. I move here. Okay. So it goes up, break new high. Swing low is this. I move to below this. Here it breaks new high. Swing low is here. I move. Okay. Break. Break again. I move. Okay. Up. Break. I move. Okay. Then until now, still holding up. Okay, moving the trailing stop. If continuation of buy during the uptrend, is it? Do you mean if you enter here, can you still buy here, 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 here? Yes or no? Okay, so this is one of the ways of using trailing stop. Okay, one of the ways of using trailing stop. Okay, so now of course, if you see situation like this, okay, yeah, correct. Kok Yon asked the question, Lily answer, buy in pyramid. Pyramid means if here you buy one lot, when it goes up, and you feel like adding again, you buy less than one lot, something like that. Okay, this is what I call pyramid. At the bottom, more lots. When it goes up, buy less and less and less, but you can do top up. One thing that you're going to make sure is your new average cost, right? Okay, your new average cost, let's say you buy here. Here you want to buy again. So when you buy here, your trailing stop is here. Okay. When you buy here, okay, your trailing stop is here. So you're going to make sure if it really turns down and hit your trailing stop, you won't end up in losses. That's the only rule. Okay, that's the only most important thing. Now, you can also set trailing stop in a very easy manner. So for example, these stocks, okay, you can see it keeps going up and up and up. And it seems like keep respecting EMA 20. So what you can do is you set trailing stop at EMA 20. Also can. Now, of course, like situation like this, okay, you see YTL, for the past 3 days, right, this stock, okay, go up by 20%. Can I take profit or not? Take a little bit more. Yes or no? Yes or no? Or I must wait until it breaks previous swing low? Of course, yes lah. Okay, you hold from down here, okay, already like how many percent? 70%. Take okay. 3 days, 20%. Take a bit lah. Okay. 3 days, 20%. Take a bit lah. Okay. It's not prohibited lah. Okay. So there is also, okay, times whereby you can take a little bit more, a little bit more, a little bit more. All right. So I think that would be all. Okay, I'll pass the time back to Shane, but I see a question beside EMA. I think you asked second time. I answer this first. Okay. Do I use other indication? The answer is yes. I look at volume. Okay. And MACD RSI depends. Okay. MACD RSI depends. Okay. So to me, the most important thing is trend and price action. All right. Trend, price action. All right. So if you learn something, can you type 666 in the chat box? Okay. While I pass my time back to Shane for more Q&A.
Wow, a lot of 666 here. All right, so if any question to ask our speaker, Jin Hao, please write your questions at the Q&A box. All right. Looks like Jin Hao have already addressed all questions on the chat box. Don't write them at the chat box here, write them at the Q&A box. The first question I see on my screen is asked by CC Gore. What platform do you use on the handphone to be able to set stop loss limit to automate your trading plan?
Okay, this one, you check with your broker. Okay, what's the apps that they are using and whether or not they have stop order, stop limit order, something like that. Okay, I have seen more and more brokers that are offering this already. Okay, so I'm not sure which one you are using, but the best thing is talk to your broker. All right, talk to your broker. You just ask them, do you have stop loss? Okay, because take profit is basically just a limit sell. But you just ask them, do you have stop order? Okay, or stop loss? All right.
Okay.
Else, sometimes I think not with handphone, but inside your web-based trading platform.
All right. So in a web-based platform. Maslan would like to ask, are you able to go back to the last slide?
Last slide.
Maybe, yeah, maybe there's some information there. All right.
This one or this? Which one, Maslan? Example or this?
Yes, I think this is the one. Okay.
Okay.
So the next question is by Penny. Now, when we see the price go up, right, how do we differentiate whether this is pump and dump or this is, normal price increase? That's her question.
Yeah, I always say pump and dump. Satu batang go up, satu batang go down. Okay. I see if I can find any example. Okay. You remember last time stocks like XOX? Something like that. Something along those lines. This one. Okay. It's like always go up, come down, game over. You can see this kind of stocks in the past also same thing one. In the past also same thing. You scroll back, also same thing one. Same thing one. Okay. A pump and dump stocks will always be a candidate for pump and dump. Okay. You see, last time also like this. Pump up after a few days, no more. This one pump up after a few days, no more. And then you have a greater pump, then boom, go down. But this one, if you get into it, like you're a very risky trader, you go up, okay, it's like break, you buy, break, you buy, break, you buy. Also cannot, but it comes down, you remember, break swing low, cut. All right.
All right. Okay. Elizabeth would like to ask your opinion whether Spritzer, does it look like a pump and dump on the price action?
Spritzer is the water. No, I'm drinking Borneo, not Spritzer. I thought it's a okay.
Yeah, Spritzer is a drinking water company.
Yeah. Okay. Spritzer to me is not pump and dump. Spritzer to me is not pump and dump. Okay. Compared to just now that one, okay, this one is farm. It's not the case. This kind is not enough volume, no liquidity. Pump and dump is you got a lot of volume coming in and the prices shot up and come down. This one, you see the chart always got gaps, okay? It's like gap here, gap there. Sometimes a whole day, no volume like this. No trading, no price changes one. This one is no volume. Okay, purely no volume. Okay.
All right. Is Parkson and IWCT pump and dump? So this is the next question.
Parkson, I think no, but it tend to has a little bit of pump and dump elements as well. Okay, so this one, you see, low price stocks tend to be this kind of sort of like victim of pump and dump, but it's not very aggressive pump and dump. Okay, but it can be a little bit scary. Personally, I just share with you, I usually don't touch stocks below like 50, 60 cents. I usually stocks that I buy is around 1 ringgit at least. The best is between 2 to 5 ringgit. This is my preference. Okay, easier to set stop loss. Stop loss is not too big. Like 30-cent stocks, you set a stop loss is like 5 cents already. It's like more than 10-20% sometimes. Okay, so Parkson, you can see that it is all the way going down. Okay, in my respect here, if Parkson drop below this level, I would say this stock maybe game over already. Okay, all right, so you got to be careful here. Okay, because the up is too aggressive, and the pump, the dump is also a little bit not what I like. Okay, if you can go up, then consolidate, then boom, go up again, then that's great. But this one, I don't think so. Okay, unless it rebound from where I draw. This is where like resistance become support. Okay, you see whether or not it respect. Okay, in my respect, but one thing, if you respect this resistance become support, it must break new high. If it doesn't break new high, to me, no use. Okay, not that useful. All right, so is it a pump and dump? I wouldn't say it is a typical like syndicate type pump and dump, but it is also meaning that people who are in the stocks, controlling the stocks, those bankers are not that friendly. Okay, not that friendly, or too many insider activity. Another one is what IWCT. Yeah, IWCT, to me, it is not really a pump and dump, although in the past it has this kind of history. Okay, limit up, limit up, limit up, then go up again. This is not like XOX type of pump and dump. Okay, like not penny stock level of pump and dump, but okay, this one, okay, if you're in this stock, how can you set trailing stop? Okay, few ways. You can set below the low of the day. Okay, if it breaks, then you sell. Okay, else you keep holding. All right, this is the way I do. This is what I call one bar reversal. When the stock is shooting up like mad, okay, this is what I call one bar reversal. Okay, like this kind of a little bit speculative type. Okay, if it breaks below this low, I probably will throw everything. Okay, and take profit progressively. Okay, so when it pump up, you move your trailing stop below here. Pump up another day, move your trailing stop below here. Pump up another day, move your trailing stop below here. Pump up another day, move your trailing stop below here. Okay, all right. Hope this helped.
Right, thank you so much, Jin Hao. The next question is by Alonso. Are you able to tell us more about what are the differences between stop price and limit price, and what are the usage?
Okay. I think this is a very, very useful, because Malaysia, we are just, and these few years we are just entering into, these kind of stop order, limit order kind of things. Okay, I think this is very important. Let me just explain. Okay. Now, there are a few things that you need. There are a few types of orders that you need to know. First is what we call market order. Another one is what we call limit order. Another one is what we call stop order. Okay, now what are these three things? Now, market order, you have guarantee execution. What does guarantee execution mean? I press buy now, then I buy. This is market order. Okay, if you trade futures, okay, certain platforms will give you market orders. Okay, but for many, many years, Malaysia is what we call limit order. This is the order type that we use. Limit order is this. Okay. I would only want to buy or sell if the price is at that price or better. Okay. For example, if I want to buy at 105, okay, then my order will either match at 105 or below. If it's a market opener, okay, if a gap down, then you will match at 105 or lower. This is our typical order type. Okay, this is our typical order type. For example, you have your bid, you have your, I think I type better. Okay. You have your bid, you have your ask. Your bid is like 1.05, then 1.04, then 1.03. Okay, then your ask is 1.06. Okay, 1.07, 1.08. Okay, this is what we are all familiar with. Now, if I key in my order, buy at 1.05, it will become a queue. Okay, this is what we understand. It becomes a queue. Okay, so meaning that I will only buy at 1.05 or better. Now, if the market, this is market not yet open. If the market suddenly open, boom, gap down, market the stock open at 1.03, then you will match at 1.03. This is what we call match at this price or better. Now, for example, if you want to set a take profit, this stock at 110, then it will be a sell limit order at 1.10. Meaning that if the price not yet reached 1.10, I wouldn't be selling. Okay. Do you think limit order like match at this price or better? This is the order type that we are familiar with. Now, if you trade futures, okay, how many of you trade futures? Can you please type yes? Or type me if you trade futures. Okay. No one. Okay. Oh, okay. So people who trade futures, you should be familiar with stop order. Okay, you should be familiar with stop order. Now, stop order looks like this, huh? Okay, stop order looks like this. Let me like, let's say one stop. Okay, stop order looks like this. For example, I want to buy this stock. Okay, I want to buy this stock, but I don't want to buy here. I want to buy only if it break out. Okay, only if it break out. Now, it break out where? Let's say break here. Okay, 1.71. Now, if you key in your so-called normal order, okay, your normal order inside your trading platform, which is by default in Malaysia is limit. If you type 1.71, what would happen to buy? It will match at current market price, which is 1.57. Okay, 1.57, because limit buy at 1.71, it means that I want to buy at 1.71 or better. Now, stop order, on the other hand, is a conditional order, meaning that I want to buy at 1.71 only if it hit 1.71. So it works like this. If the price were to continue going down and down and down and down and down, then your order will not be matched down and down and down and down. It will not be matched. But let's say if the price go up and hit 1.71, then your buy stop in this case will be activated. Okay, would be activated. So this is what I call conditional order. Buy only if it hit 1.71. Now, when it comes to stop loss, it's actually a sell stop order as well. So what does it mean? For example, if you go and key, let's say I want to put my stop loss here. But if I go and key in normal stop order at 1.48, what happened? It will sell at 1.57, which is current market price. Now, of course, if I key a limit sell at 1.8 something, it will become a limit sell, and that will be our TP, our take profit, for example. So stop loss means a sell stop order, meaning that if the stock were to go down to that trigger price, then only my sell will be activated. Okay. Hope that clear up what is stop order. All right.
All right, thank you so much, Jinhao, for a
Yeah.
very detailed explanation about a different type of orders, such as limit order and also the sell stop order. All right, so looks like many of our participants today are already clear, okay, with your illustration. So time has run out for the Q&A sessions. Hope that you have gained enormous value learning from Jinhao about how do you do trading without speculating in the stock market. So allow me to share my screen. Just a minute, yeah. Okay, so ladies and gentlemen, you just heard from the founder of Street Finance, who is Mr. Bong Jinhao. Okay, thank you so much, Jinhao, for doing this segment for us.
Thanks everyone for joining as well.